Hello everyone and welcome to FX Addicts Weekly Currency Update. Today is May 4th, 2012 and this is Tim, the Currency Professor. Well, we had kind of a somewhat interesting week, pretty much ending up where we started last week at in most things. A couple of exceptions, but again, very minor type of trading. Still within the range that we've been in for the last three months for most things. The euro today down about 70 pips right now, and this is now the fourth day lower, and we continue to see a little bit of a pullback. Again, we're still in the same range. The same range here that we've been in for the last 3 months now, a little bit better. We're since the beginning of or middle of January, so we're very much in that same range. Now we're heading back down towards the support level, which is down just under 130, and this will be the fourth time that we get down there. It looks like we can probably continue to that level till probably into next week, depending on how today closes. And if we look at the weeklies, we can see how this week now we're pulling back down below this channel line. So really for the last 3 months we've been bouncing around and hitting up or going just barely above that channel line and falling back down. So there's still quite a bit of a risk of an upward move. However, we're getting closer and closer to a point at which if it doesn't do it, and if it doesn't do it with a lot of vigor, then it's going to fall apart here and sell off. So fundamentally, we can certainly make a very good case for it to sell off from here. There's a lot of issues in Europe, and the U.S. economy is certainly better than Europe. So theoretically, from a fundamental standpoint, the dollar should definitely gain against the euro. So the euro should fall off. Now we look on the monthlies. We're starting to form a little bit of a triangular pattern here, which technically usually means that we're going to continue on the trend, and the trend this time is down. So we're looking for this to sell off from this point, and we're coming closer and closer to a point here. So this month could be the month May, or we could just bounce around in this range for a couple more weeks and then sell off. So either way, though, it looks bearish longer term. British pound against the dollar, down about 28 pips today, and this is now the fifth day down for the pound against the dollar, and really starting to show like a little flagging position here, pattern here. And we were up, of course, 10 days in a row. Now we're down 5, but down very little. So the strength is still there in the market technically. If it's going to fall off from here, it would need to still go up and test these highs. More than likely, though, it will gain strength and exceed those highs. That's usually the way these patterns kind of work out. On a weekly basis, we ran up to this trend line up here at about the 163 area and have since fallen back. So it seems like that is holding. Again, we're going to have to wait and see here over the next week or two what it does, but technically we should fall back from that and really go back down to this trend line, which is down around 153. And we look here at the monthlies, we can see how that is a little bit more here, and it's really forming on the monthlies here. We're forming this kind of a triangular pattern. So since this big sell-off back here, we consolidate with this upward motion. Usually it sells off to the downside from that. So longer term, we could still see some substantial sell-off here on the pound against the dollar. So that could happen, but of course it's many months out. U.S. dollar against the Swiss franc, that is actually up a little bit today. We're having now the fourth day up in a row, up 47 pips. And we're still, though, within the same range, bouncing around, not a whole lot of direction in either way. And on the weekly basis, we can see how this week is now breaking up, and it's going to close up near the higher end of the range that we've been at for the last 3 months. And monthly still looks very strong. The spike down here came back up. We've consolidated now. Now we can certainly work our way higher. There's a very good possibility of that. U.S. dollar against Japanese yen selling off a little bit today, down 34 pips. For the week, it is pretty much about the same area where we started the week. So we had that sell-off late last week, and then it continued into this week a little bit. We bounced midweek, and now we're selling back off. So looks like we're just testing these lows, and around that 79.50, 79.75 area. So if we can hold that level, it is below the 50% retracement level, but if we can hold that level, it would be positive. On a weekly basis, we're just consolidating lower, and as we do that, at some point here, it will turn around and move up. We are above that longer-term trend line, so everything still looks very positive, and we look at the monthlies also, still looks very positive. We've had a nice pullback now, so the next move will be higher and more than likely considerably higher, probably up around 90 area. The euro against the Swiss, a little bit of a down day today, down 1 pip. Overall, the ranges are getting smaller and smaller, and we are now above this longer-term trend line. So the fact that we're getting smaller and smaller ranges and we're above this trend line is a very good indication. At some point here, it's going to have a violent move, probably to the upside, because to the downside, it's being stopped by the S&P at 120. Euro against the yen, giving back quite a bit today, down 98 pips right now, down under 105. We had a support level down in the 104s, and we have now met that and exceeded it just slightly. So it would need to bounce back from here and bounce back quite hard. If not, then it's probably going to continue lower. If we look here at the weeklies, this pattern is not really a very good pattern. It's not very supportive at all, so it could sell off quite a bit from here. And we look at the monthlies also. We've talked about this many times, how we should have gotten up here at the 113, 112, 113 area to have completed this pattern and then sold off. And the fact that we didn't now, we have this month, May, if we have a same type of sell-off that we had in April, that would be actually very bearish for this market, and we probably could end up in the lower 90s, upper 80s sometime within really a month or two. It could happen very quickly. There's a lot of weakness there. So that is it for this week. Certainly visit www.fxaddicts.com. Be more than happy to answer questions or help you out in any way we can. Certainly check out our classes. We have quite a few good ones. In 2 weeks, a week from Monday, we have another scalping class starting, so that seems to be very popular. By all means, check it out. And anything else, feel free to shoot me an email or give me a call. Thank you.